Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MCGRATH RENTCORP quarterly report. MCGRATH RENTCORP offers a diverse range of businesses and services through its four segments. 1. Mobile Modular. Rents and sells modular buildings for various purposes such as classrooms, offices, construction field offices, and more. 2. Portable Storage. Provides steel containers for temporary storage solutions to industries like construction, retail, and healthcare. 3. TRS RENTELCO. Rents and sells electronic test equipment, including oscilloscopes, amplifiers, and signal source test equipment, primarily to aerospace, defense, and electronics industries. 4. Enviroplex. Manufactures and sells portable classrooms directly to public school districts and educational institutions in California. These segments cater to various markets, including construction, education, healthcare, aerospace, and more, providing a comprehensive range of rental and sales services for modular buildings, storage containers, electronic test equipment, and portable classrooms. The MCGRATH RENTCORP stock price has remained relatively stable in the past year, with minimal changes exceeding 0.74%. While major announcements such as quarterly earnings, reports, and conference presentations have typically resulted in stock price movements above this threshold, there are instances of smaller daily fluctuations where specific news or general market sentiment may have played a role. However, it is challenging to definitively link these minor movements to a single, identifiable news item. Most distinct news events led to more significant shifts in the stock price, making it difficult to pinpoint what has caused the lack of significant changes in MCGRATH RENTCORP's stock price over the past year. The primary drivers of revenue growth or decline in the company's financial performance can be summarized as follows. Revenue growth is primarily driven by a significant increase in leasing revenue, up by $94.3 million, 184% YoY, and sales revenue, which increased by $2.8 million, 95% YoY. Additionally, rental operations revenue saw an increase of $6,206, while higher average rental equipment on rent and rates contributed to a 2% growth in rental revenues. On the other hand, revenue decline was mainly attributed to a decrease in sales revenue by $13.66 million, 21%, and a decline in rental-related services revenue by $13.1 million, minus 42% YoY. Other revenues also saw a decline of 6% due to lower gross profit on rental operations revenues. The company's performance varied across different segments, with the TRS RENTELCO segment experiencing a growth of 17% in Enviroplex, seeing an increase of $4.9 million in sales revenue and increased sales margins. However, portable storage saw a decline of 11% due to lower gross profit on rental operations revenues. Net income and profit margins decline. A summary: the financial performance of a company has taken a hit, with net income and profit margins experiencing significant declines. In Q3 2025, net income decreased by $106.8 million from the previous year's $149.3 million, representing a staggering 72% drop. This downward trend continued into YTD 2025, where net income plummeted by $86.3 million. Profit margins also suffered, with gross profit margin decreasing to 46.6% in Q3 2025 from 46.2% in the same period last year. Adjusted EBITDA margin followed suit, dropping to 38% for the 3 months ended September 30, 2025, down from 39% in 2024. The reasons behind this decline are multifaceted and influenced by various macroeconomic factors, including interest rates, inflation, geopolitical tensions, and foreign exchange rate fluctuations. Additionally, changes in legislation and regulations, as well as a federal government shutdown, have also contributed to the downturn. Furthermore, the company's operating activities have been impacted by a decrease in net cash provided due to increased accounts receivable and higher customer billings compared to related cash payments. These factors have cumulatively led to a decline in net income and profit margins, signaling a challenging period for the company. The company is generating positive operating cash flow, indicating a strong financial position. The data shows that net cash provided by operating activities has been consistently high in both 2024 and 2025, with figures of $337,596 and $174,765 respectively. This trend continues into the current year, with the 3 months ended September 30, 2025, also reporting a positive figure of $174,765. The company's debt level and interest expenses have undergone significant changes. Notably, the average debt levels have decreased by 26–27% in various reports, indicating a reduction in overall debt. Additionally, interest expenses have seen a substantial decrease across multiple reports, with some instances showing a drop of over 40%. However, one report indicates an increase in interest expense, but this appears to be an isolated incident. Overall, the data suggests that the company has made efforts to reduce its debt and associated interest costs. The company's financial performance varied across different segments and regions. Notably, the mobile modular and portable storage segments excelled, showcasing strong growth potential. Conversely, TRS Rentelco and Enviroplex struggled, indicating areas that require improvement. These discrepancies highlight the need for targeted strategies to address underperforming sectors while capitalizing on successful ones. Management's outlook on company strategy. The management team has expressed confidence in the company's ability to meet its financial obligations. They anticipate fulfilling their capital needs through a combination of bank lines of credit and senior notes, indicating a proactive approach to managing the company's finances. This strategy suggests a focus on maintaining liquidity and flexibility in the face of future challenges. The company's financial summary reveals that it has a history of paying dividends to its shareholders. In fact, the company has paid dividends in both 2024 and 2025, as stated on pages 11 and 29 of the report. However, when it comes to share buybacks, the company has taken a different approach. According to page 6 of the report, there have been no share buyback or repurchase activities. Concerns about inventory buildup or supply chain disruption exist. The company's financial summary reveals several indicators of potential issues with inventory buildup and supply chain disruption. Notably, the average utilization rate has decreased by 6%, while the average monthly total yield has dropped by 5%. Additionally, rental equipment on rent is down from 76.5%, suggesting a decrease in demand. Furthermore, period-end rental equipment is up, indicating that the company may be holding onto more inventory than necessary. Rental operations revenue has also decreased by 7% due to lower rental revenues. Finally, average rental equipment and period-end rental equipment have both seen significant decreases of 9% and 5%, respectively. These statistics collectively suggest that the company's supply chain is experiencing disruptions, potentially leading to inventory buildup and decreased revenue. That concludes the financial summary for MCGRATH RENTCORP. Feel free to comment below, and I will be happy to answer them when possible.